You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Fintech and crowdfunding has been all the rage for a while, but not everyone here understands the different types of crowdfunding. So let me just give a very quick crash course. Toward the late 2000s, you have Indiegogo and Kickstarter, which means people go online, make a donation or pre-purchase a product. It's not a securities offering, so there's no regulation, and they became obviously very big. I believe both Indiegogo and Kickstarter are approaching $1 billion in valuation, if not more. And then in 2013, AngelList, which is called Title II, that's a model where you have high net worth or accredited investor on a platform like AngelList invest money into a startup. Now, from Uber to Zenefits to many of the big names, got the very first funding through that format, right? And as my partner Lee had just demonstrated, the return there is very substantial. So the third wave, it's been legal for about 3 months, is called true retail equity crowdfunding, where everyone, it doesn't matter if you're a student or a billionaire, you can actually invest in companies that we, Republic, curate. So you may ask, with the traction that AngelList has, who needs another crowdfunding portal? And aren't you just bringing the worst quality deals to the least informed segment of the public? Let me share with you some startling statistic. More girls are graduating from college nowadays than boys, than men. Women own 50% of small business in America, control some 75% of household purchasing decision, over $12 trillion in total value. 97% of small business loans go to small business with only male founders. 93% of venture capital go to companies without a single woman co-founder on the team. The statistic for minorities, for people outside of the Silicon Valley ecosystem, is even more lopsided. Almost 60% of all venture capital go into companies that are focusing on an app software, another Snapchat, another app, mobile app. I think we all can believe that good ideas, potential impactful businesses or ideas are everywhere, equally distributed. Clearly, early stage financing right now is not at all equally distributed. It's in pocket, and for that reason, I believe that true equity crowdfunding is the real potential of return in the long run. So we have a number of companies on Republic, and our angle focus on women founders, mission-driven, or innovative companies of different type. Let me showcase some of the companies that we have on Republic. So going back to these four, and let's just call unlevel playing field in the venture financing ecosystem. It's not the venture capitalists are intentionally being racist or biased. It's just they rely on certain fundamental metrics. And really, entrepreneurs nowadays, unless you're from an upper middle class family or graduates from Silicon Valley or Silicon Alley and manage to get that funding, everyone else, how do you get the first $50,000 or $100,000 to validate your product so that you can build our traction and get venture financing? These four are the type of women founders or minority founders without the traditional connection. So usually they wouldn't be able to even start a business. Now through Republic and through, literally anyone here can go on your phone and make an investment in about 20 seconds. They have a chance to validate it. In fact, the last company, Youngry, is closing in a couple hours. They have raised past the minimum, and I think that now they're going to close about $60,000 from about 200 individual investors. The other three, one of which is a woman from Harvard, from Princeton, with like strong background and mission. But now through our platform, I think that she's going to be able to take the company to a point where AngelList or Howard eventually can invest. Last note for the investors, which most of you are, different than public stage investing or even AngelList investing. Republic, I call it fund vesting. You invest half with your head and the other half with your heart. You're probably going to dish out less than $1,000 in investment because you believe in what people do. And if they do really well, hopefully that $1,000 is going to be $1 million. So, if anyone has any question for me, just...
We'll do it outside for a drink after.
Perfect.
Thank you, ma'am.
Thank you so much.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.